Cryptocurrency was once dismissed as a volatile experiment, a playground for tech enthusiasts and internet libertarians. The idea of digital money, not backed by any government, seemed absurd to traditional finance. But today, crypto has matured into a multi-trillion-dollar asset class, drawing in major institutions, corporations, and even nations. The conversation has shifted from obscure forums to Wall Street boardrooms and government halls. This is no fleeting trend. It's a fundamental change in how we think about money and ownership. The transformation was gradual, fueled by technological innovation and growing user adoption. Early believers saw the potential for a decentralized financial system, and now, the world is catching up. On June 15, 2025, we stand at a pivotal moment. Skepticism is giving way to acceptance. Cryptocurrencies are now a regular feature in mainstream financial news, and people everywhere are buying digital assets to save, transact, and protect their wealth. The journey from fringe to mainstream has been turbulent, but the direction is clear. This essay explores the key drivers behind crypto's incredible surge, from global reports and shifting politics to internet culture and institutional capital. To grasp the scale of crypto's rise, we turn to data, specifically Gemini's Global State of Crypto report. This annual survey spans tens of thousands of people across continents, revealing not just ownership, but motivations and beliefs. It uncovers why people buy crypto. For some, it's high-yield investment. For others, a hedge against inflation. The report's demographic insights show crypto's user base is diversifying. Older generations and more women are joining in. Ownership is now spread across age, gender, income, and education, reflecting a broader cross-section of society. The report also tracks confidence in crypto's future, a key indicator of market health. Recent findings show a rebound in optimism, driven by regulatory clarity and new investment products. High confidence encourages people to invest, hold through volatility, and invite others in. These data-driven insights move us beyond anecdotes, showing crypto adoption is both global and accelerating. The Gemini report is a window into the evolving face of crypto's mainstream moment. The numbers are clear. Crypto ownership is accelerating worldwide. No longer limited to tech-savvy nations, digital assets are now held by a diverse global population. In Europe, countries like France and the UK have seen ownership rates soar, thanks to clearer regulations and accessible platforms. Singapore's tech-forward environment and the US's growing user base highlight crypto's global reach. Factors like media coverage, user-friendly apps, and alternative investment demand fuel this surge. We're past tentative experimentation. Crypto is now a staple in personal financial portfolios. Motivations vary: wealth creation, preservation, or inflation protection, but the outcome is the same: a larger, more diverse community. Each new user strengthens the ecosystem, making it more robust and attractive. The adoption curve is steepening, signaling a new era of widespread integration. Regulatory uncertainty once cast a shadow over crypto, deterring investors and institutions. But the climate is changing, especially in the US and Europe. Political leaders like former President Trump now signal support for crypto, reducing fears of government crackdowns. Concrete policy moves, such as bipartisan US efforts and the EU's MiCA regulation, are providing much-needed clarity. Clear rules foster innovation while protecting consumers, building long-term confidence. This regulatory clarity boosts public trust, encouraging participation from conservative investors and everyday citizens. Governments are shifting from confrontation to collaboration, legitimizing crypto as a serious asset class. A predictable, supportive environment is now being laid, setting the stage for responsible growth. Trust is the foundation of finance, and with it, crypto adoption is accelerating. The era of legal gray areas is ending, replaced by a framework for stability and maturity. Memecoins, once dismissed as internet jokes, have become a surprising force in crypto adoption. Their playful branding and strong communities make them accessible to newcomers intimidated by complex technology. Memecoins lower the barrier to entry, making crypto feel more like joining a club than making a risky investment. Viral moments, celebrity endorsements, and media coverage draw millions into the space. While speculative, Memecoins serve as a gateway. Today's Memecoin buyer could be tomorrow's DeFi user. Exchanges list them to attract new customers, and even some funds allocate small portions to these assets. The power of community and narrative drives value, not just technology. Memecoins prove that social engagement can be as important as utility in building adoption. They've transformed from a retail craze to a mainstream phenomenon. By making crypto fun and relatable, Memecoins have become an effective on-ramp for global users. Their success highlights the unexpected ways internet culture shapes financial innovation. Institutional finance once kept its distance from crypto, hindered by regulatory and practical barriers. The arrival of spot Bitcoin ETFs changed everything, offering a familiar regulated way to gain exposure. These ETFs, traded on traditional exchanges, let investors access Bitcoin without the technical hurdles. Their launch unleashed billions in institutional capital, signaling a powerful vote of confidence. Financial advisors, pension funds, and hedge funds now participate with ease, boosting market liquidity and stability. Institutional involvement adds credibility and permanence to the ecosystem. These are long-term players, not just speculators, integrating crypto into global finance. The presence of ETFs bridges the gap between Wall Street and digital assets. This wave of smart money is reshaping the market, setting the stage for the next chapter of growth. Crypto is no longer a fringe bet, it's becoming a core part of diversified portfolios. Bitcoin's identity has evolved from digital cash to a new form of digital gold. Once tied to tech stocks, Bitcoin is now decoupling, seen as a reliable store of value. Its fixed supply, decentralization, and resistance to censorship make it attractive in uncertain times. Investors are holding Bitcoin as insurance against inflation and geopolitical risk, much like gold. Evidence shows Bitcoin's price can remain stable even when tech stocks fall. This shift broadens Bitcoin's appeal to conservative, long-term investors seeking wealth preservation. Its new role provides a stable foundation, reducing reliance on hype. Bitcoin is now a unique, essential component of modern portfolios. Its evolution ensures relevance for decades to come. In many countries, inflation is eroding savings and forcing people to seek alternatives. Cryptocurrencies, especially Bitcoin, offer a lifeline with their fixed, predictable supply. For those facing currency devaluation, converting to crypto is a way to preserve value and escape failing systems. The Gemini report shows that in places like Argentina and Nigeria, inflation protection is a top reason for adoption. Crypto is used as a savings technology, not just for speculation. This trend is spreading. Even in developed economies, inflation fears drive interest in digital assets. The need for a reliable store of value is universal, making crypto adoption a global phenomenon. As economic uncertainty persists, the appeal of decentralized, scarce assets grows stronger. Crypto empowers individuals to protect their financial future, regardless of geography. As long as inflation threatens, demand for crypto will keep rising.